Hey everybody, my name is Steven Cawiezell with thetradersplan.com. I definitely appreciate you taking time to watch this presentation and all the other great presentations today. I want to talk about a topic that is near and dear to my heart. It's how to time the bottom in stocks. And this has been a topic and trading systems that I have been trading and working on for years. And I'm going to give you a very strict set of rules today, and we're going to cover that. So you're definitely going to want to pay attention. I'm going to give you some rules today. So let's get started. My big promise to you is by the end of this training, you're going to have a serious trading advantage over a majority of traders. And I know for an absolute fact that the 3 rules that I'm going to show you, combined with 20 minutes a week, can make you a successful trader. Now, this is a complete rules-based approach, but luckily for me, I get to see traders put this into action every day. And I know that's a big promise, but I'm going to show you. So real quick, got to make the lawyers happy, so I'm going to let you read that disclosure real quick before we get into the good stuff. Okay, let's move on. All right. So I want to be respectful of your time and make sure that you're in the right place. So this training is for you if you need an actionable trade plan to pull weekly retirement income from your trading, right? You need an actionable trade plan. Or if you have been consistently losing money in markets, even in the bull markets, and I get emails all the time that the market's going up, people are still not doing well. Or maybe you want to retire early, or maybe you just cannot afford to lose any more money from trading. A lot of the traders that do work with, they've been trading for a long time, and just haven't quite broken out yet. So if that sounds like you, I want you to pay attention. Now, a little bit about me, just so you know who is on the other end of the screen. This is me right here on the right. I am a former financial advisor turned trader publisher. Now, when I was a financial advisor, I worked in a very large practice with 60 million assets under management. I'm the author of the Expert Trading Systems book, which you can get on Amazon, and I'm the head publisher and founder of thetradersplan.com. Now, what makes this easy? What makes this rules-based system that I'm about to teach you easy? For one, there's zero fundamental analysis involved, right? Just price and volume. No earnings, no sales, none of that. Doesn't matter, right? We're focusing on price and volume. There are only 3 rules, and you can literally write it on a Post-it note. Okay, so you got a picture of a Post-it note right here. 3 rules you can write on a Post-it note and stick to your computer screen. That way you don't forget. It's literally that easy, and it only takes 20 minutes per week. And I'm going to walk you through all these steps. Now, I also want to make sure, I said who this is for. I want to make sure to tell you who this is not for. If you just cannot follow rules and choose to keep following your gut, right? You just can't follow a rules-based approach, or you don't want to, this is definitely not for you, because this is a completely objective approach. Or maybe you love the long shot gamble approach more than treating it like a business, more than the ROI. Like when I work with traders, right, it is time to, in the rules-based approach I implement, it's time to treat trading like a business. Or maybe you can't come to terms with the fact that the market knows more than you. And I put in parentheses, the market always right, because it always is. Doesn't matter what happens, if you win or lose, the market's right. I'm not here to argue. I'm just here to follow rules and let my system be my guide, okay? So this is the once per week setup that I'm about to talk about. Now, when studying the bottom of stocks, I noticed that there are certain qualities all stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we got to recognize for these qualities before they make their big move. So, good news, I have narrowed these qualities down into a rules-based winning system that we're going to go through here in just a minute. Real quick, I want to talk about really a big picture view first, right? How to set this up before we get into the system. This is what I do. This is literally what I do. Every Saturday or Sunday, I spend 15 minutes going through my scans to find the best setups, right? On Monday morning at 9:29 a.m. Eastern, 1 minute before the market opens, I just place my market order, right? It is a market order. It is that easy, right? Place it right before the market opens, and then set your alarm on your cell phone every Monday and just rinse and repeat, right? Spend 15 minutes finding the setups, and then place your market order, and then voila, everything else is mechanical and will take shape. So it really is just that easy. I want to talk about the weekly reversal pattern. Okay, so this right here, that's the system we're going to talk about. This is EverSource Energy, and this is just a chart. This is just a sample, and this is a weekly chart, by the way. So I want to be clear. This is not a daily chart or an hourly. This is a weekly chart. So this is a end of week system. Okay. This is the signal bar we're looking for right here. Okay. Now I think both you and I know that not all stocks you're going to pick the exact bottom and then they're going to go to the moon, right? But you know that, I know that. But why I like to show you this, just to show you how powerful this pattern really is. And when you start to pay attention, when I give you the rules to this simple reversal signal bar right here, you're going to see it pop up on your screen over and over and over again. You can look at probably any stock on your watch list. Just look at a weekly chart and go back a couple years. Just look at a couple years worth of data and you'll probably see this pattern 3 or 4 times. So this is what we're going to focus on, and let's get right into it. All right, so this is Amazon, and I'm using this chart right here because this is a stock that we have traded multiple times this year, okay? So it's very, very easy. You can see right here, look at this. You see this pink arrow right here? Pink arrow right here. There's one over here. 1, 2, 3, 4, 5. This is how many times, just looking in the last almost 2 years, this is a 2-year chart, that you would have seen this pattern pop up. So if you have a watch list, you're trying to find for ideal entries, you definitely want to pay attention. So if you haven't shut off all your distractions already, I definitely recommend you going ahead and doing so, because I'm going to get into these rules and I don't want you to miss anything, okay? So this is the signal bar that we're going to focus on today, and I'm going to walk through the rules, but it's just funny how many times you can see this and it continues to work over and over and over and over again, and we're on this signal right here, okay? So these are the rules. These are the 3 rules. I told you they were simple. I told you you could write it on a Post-it note. This is it, right? We're going to walk through these rules one by one. And then we're going to go through them again, and we're going to look at several chart examples, because I want not only for you to get comfortable with the rules, I want you to get comfortable, looking at these setups so they will visually start to pop out on the screen. Okay. Let's focus on this one right here, because well, this is one we traded. It's in the middle of the screen and it's pretty obvious. So let's look at this. Rule number 1: weekly chart must undercut the prior 3 weeks. Right, so what I mean, this is a reversal. The pattern is called the weekly reversal. So I'm looking for the low of this week right here to be the lowest point under the previous 3 weeks. So it can undercut the previous 3 weeks. 1, 2, 3, check. Right, it's pretty easy. Move on to rule number 2. Chart must close above previous week's close. Is the bar green? Because if the bar is green, it's just that simple. Like, it closed above the previous week's close. Doesn't have to close above the previous week's high. Right? Just has to close above the previous week's close. So rule number 2, the bar just has to be green, right? It has to finish up. So it has to revert, has to undercut the previous 3 weeks, rule number 1, and then it has to close up, rule number 2. Rule number 3, very, very simple, must have above average volume. Think about this. Look at Amazon, right? Amazon, I mean, at this point in time, let's just say this was an $1,800 stock. You have, 50, you have this skyscraper volume right here. These are the pensions, the hedge funds, the mutual funds. This is not you and me, the retail traders. This is not our grandmother up the street. These are the big boys, the smart money stepping in and supporting their stock or initiating a position. I mean, you have 50 million shares right here that was traded this week. That is a boatload. Yes, this was at the bottom of the bear market back in March. But I mean, it is a perfect example. Like, when you see this skyscraper volume, the bigger the volume, the better. So when I say must have above average volume, I plot a 50-day moving average on this volume. And if it's above that line, it's above average. If it is above the 50-day average, it's above average. And it's just that simple. Now, doesn't have to be above the previous week, right? Because you can see right here, this wasn't above the previous week, even though it didn't fulfill the rules. It just has to be above average. Obviously, if it is above the previous week, right, that makes it even better. But when I see institutions like this piling in the stock, that makes me feel pretty good about it. And I'll talk about the psychology behind each rule here in a second. So let me walk you through the rules one more time, kind of explain to you why I have these rules in place so you can make the connection, and then we'll go through it again. So rule number one, the low of this week, the signal bar, right, must undercut the previous 3 weeks, 1, 2, 3. One reason why I do that is, let me ask you this: how many times has your stop been picked off and then the stock just reverses and goes in the original direction you thought it would? Happens all the time, right? The market just tends to come after our stops, okay? So when the market hits a new low and runs out all the stops right here and then just flushes all those stops out and reverses, that's incredibly bullish to me, right? Because I like buying shakeouts, right? Because all the bears got sucked in and now they're getting sucked back out, right? The bulls are stepping in, taking charge, and that's usually when you have an above average move the other way. So the psychology behind rule number one is, I just want to run some stops, right? I want to scare some people. I want to shake some people out, right? It's really that simple. Rule number two, must close above the previous week's close. There needs to be, the psychology behind this rule, there needs to be enough power in the reversal to at least close positive, okay? It's just, you know, I've seen reversals. You could say this was a reversal right here, right? Because it fulfilled rules 1 and 3, right? But it didn't fulfill rule number 2 because it wasn't green, and look, it failed, right? Because it was still in a downtrend. So when it closes, when it undercuts the previous low and then closes up, right, it's showing me that there is, you know, more buying than selling, right? And I want to be on the buying side, all right? So I'm just looking for a little bit more comfort, a little bit more money coming in. Now, rule number 3, must have above average volume. Why do I do that? Well, it's really simple. You know, for one, we know, like, I want to be on the side of the smart money because, like, they trade more than us. Let's just be honest. The smart money trades more than us. And the reality is, when the smart money starts piling in, especially a big stock like Amazon, they're not going to turn around and sell that the very next week. Mutual funds, on average, it takes 3 to 6 months from the start of their first position to complete their position in their portfolio. So it takes 3 to 6 months to build a portfolio. And as retail investors, we can just hop on the bandwagon, ride the coattail all the way up, get in and out whenever we want. They can't do that. So I see us having a huge advantage of being able to just hop on the coattail and ride it all the way up, while the institutions are completing their position that takes 3 to 6 months, excuse me. So it's really that simple. I want to be on the side of the institutions, and if the institutions are piling in, that makes me feel comfortable because I know it takes them 3 to 6 months to complete it. And I know when they take a big position, let's say a pilot position of $50 million, and they want to build that up to 500 million, it's going to take them a while. So they're just going to have to keep supporting the stock, supporting the stock, supporting the stock. Okay, those are the 3 rules. Very, very simple. Now that we know this rule, we paid attention to this. Like, this is kind of an obvious one because the whole market reversed at the same time. The NASDAQ, a lot of tech stocks did, the whole market did. It reversed the same week. But what about other times when, you know, the market just might be pulling back? Look at this right here, right? It pulled back, it fulfilled all the rules, 1, 2, 3, had above average volume, a nice little swing trade. Over here, right? Look at this, reversal, closed up, rule number 2, above average volume, a nice little trade, okay? Right here, look, it happened again, and this was one that we actually traded. I traded this one, I didn't trade this one. And this is one that we actually traded. Look, we got stopped out right here. We hopped on the bandwagon. When this reversed, we hopped on, right? We sold half at about 8%, and then we let the rest ride until it broke this moving average. And then right here, it broke. We booked a net profits of 37% on the trade. But you know what the funny thing is? The very next week, it gave us another buy signal, so we hopped back in, right? So again, sold another half at 8%. Rose or stopped to break even, and this was just a small little 4% swing trade. This one was much larger. Some are big, some are small, but you know, we have these stop losses in place to really kind of keep us out of trouble. But sometimes, like, it just reverses and goes the other way. It gives us a signal to get right back in. And then look right here, a few weeks ago, excuse me, 4 weeks ago, it happened again. You had another reversal right here. Above average volume fulfills all the rules. And I think Amazon's just kind of been going sideways for a little while, which is why I didn't trade this. But you can see right here, out of all the times I can see this, we got 1, 2, 3, 4, 5 signals. These 4 were winners. This one hasn't done anything just yet. There might be another one in here. But just look at the chart and look how interesting it is once you train the eye. And really all you got to do is just look for the swing low points. Look at swing low points on charts and see if you see this setup, right? Because it's just a very, very easy setup to identify. So swing low, swing low, swing low. And then on this pullback, this was the low point of the last several months, okay? And then it happened again. So this one was very good to us. It worked out really well. Very, very easy rules to follow. So I challenge you to just go look at some stocks on your watch list and look at a weekly chart, and I feel confident you'll be able to see this kind of pop up over and over and over again. So I'm going to, oops, sorry about that. Let's look at some more samples. Okay, and I'll look at questions towards the end. So this is KBH Home. Now, obviously, not all trades were huge winners, right? So I like to show many different examples, but look, this was a clear reversal right here. Look, it tried to break the 40-week moving average, reversed above it, right? Closed in the green, rule number 2, huge volume. When I saw this, I entered at the open on Monday because look, the stocks, the smart money came in. They didn't want their stock falling below a moving average, so they printed that wick, reversed it up. Huge, huge volume, the most volume it had in 2 months. This was a buy. So we entered, and it took about 5 or 6 weeks to get going, and then it just absolutely took off, right? We sold half at 8%, booked a little bit of profits, and then we sold the rest when it broke the moving average, okay? So now, did we get in on the exact bottom? No, right? Pretty close right here. Did we get out at the exact top? No, but I mean, I think this stock dropped from $4.40 to $9. Like, I'm happy to avoid that sell-off right there. But just a nice move, a nice swing trade. It was just a good trade. It was a good setup, a very, very high quality setup right here. So let's look at another example. You can actually see one right here. You can see this, and this one actually failed, right? Not all of them work. But a lot of them do, right? If you look for high quality setups, a lot of them do. This one failed. This one was one that we took, and it worked just fine. All right, so this is Axon Enterprise. Now, I think this was actually our first reversal of the year. This was, yeah, we actually took this like first 2 days of the year, kind of in that range, but so I like to show this example because it doesn't quite look so obvious that this is the swing low point, but it was. The low of this right here undercut this. So it undercut the whole consolidation, right? Rule number 1. Rule number 2, closed up, right? Rule number 3, above average volume, okay? So we bought at the open on Monday, and I'm gonna talk about the money management rules here in a second. We bought at the open on Monday. And we actually came very close to being stopped out. I put a stop loss 1% under. This was kind of a little bit of luck. It didn't hit it, came within a few pennies, and then it turned around. We sold half at 8%, raised our stop to break even, and then we sold the remainder when it broke the 50-day moving average. So I use the 50-day and not the 10-week on when I sell. But this is just a nice example. They obviously don't all go to the moon. But you can, you know, if you take 1 or 2 a week, you can really ladder it out, build a nice portfolio, and have some nice swing trades, have some nice little income trades right here. So I like to show this because this doesn't quite look as obvious, but it worked out, and it worked out just fine. Okay, so it's just kind of another example. Now let's look at another one, and this is CrowdStrike, and this was a very, very nice gain. We did very, very well on this. But again, we just follow rules. This, ladies and gentlemen, this is all we're doing. All we're doing is following rules, right? I'm not changing rules like after I buy it, you know, then decide where to sell like I have, You know, I always enter at the open on Monday. I always have I treat all trades the same, put the exact same amount in, sell them at the exact same point. I never know which ones are going to be my big winners, never. As a matter of fact, this CrowdStrike, look at this weekly reversal pattern right here. And this was the same reversal of the week of Amazon, okay? So I bought Amazon first, and what I noticed on this stock is after it surged a couple weeks, so I did buy this one a little late, but it was just kind of going sideways, so I went ahead and entered it and just kind of had a 10% stop loss because there was a clear reversal right here. This didn't go anywhere for like 2 weeks. I thought this was going to be a loser, but rules are rules. It hasn't hit my stop loss. It hasn't hit my target. So I went ahead and I just held it. And it was absolutely a huge winner, right? We entered in $60, I think, and 12 cents, something like that. We ended up getting stopped out around $100, $99, kind of in that area right there. And it was a huge gain. And obviously that sucks because look, we got picked off. We were one of the ones that got picked off. It reversed and went the other way, but it wasn't green. So this just, I didn't end up buying it back, and it went on to make bigger gains. But that's just, you know, that's part of trading. But on this one, you know, because I trade options too. So we entered the stock at $60 and I just bought one call option, just a simple call option. So with the call options, I sell them a lot quicker, right? So I sold this call at a 60% gain, and then I'll just continue to let the stock run, right? Got picked off for a huge gain, and then it just continued to go up. But again, hey, you know, that happens, right? We got picked off around $100. It went up to 153 within 4 weeks, but I was incredibly happy because this was one that, you know, it's hard to follow rules sometimes, it really is, but this is one that you just look at. I just wanted to heave it, but I couldn't because I follow rules. Just completely rules-based objective, and then it just all of a sudden starts taking off, you know, and I'll kind of take you back to KBH home. Look, like you entered it right where you were supposed to. It took like 5 or 6 weeks to get going, and they don't all do this. Sometimes they will take off immediately, but it just kind of goes to show you that if you be patient, if you follow rules, if you don't say, I'm bored with this one, you feel like you always have to be buying and selling, you will be rewarded. You enter at the open on Monday, you follow the rules, okay? So this was a very, very nice trade. Now, I gave you the rules. Let me kind of highlight the rules just to make sure that you saw these. And going back to the Amazon chart, these are the 3 rules. These are the rules that you need to write on a Post-it note, okay? Very, very simple, easy rules to follow. This is the signal bar you're looking for, okay? I want to give you a system. Now, let's look at the money management rules for a second. This part is equally as important because once the system tells me what stocks to buy, then I treat them all the same for the money management rules. So what I do, this is an end of week pattern. I don't buy on Friday, right? Because the week hasn't closed yet. I buy at the open on Monday. So I enter at the open on Monday, sell half at 8%. That's my target one. I'm always selling half at 8%. I set a stop loss at 10% on every stock. So every stock is half is getting sold at 8%. Or the whole thing is getting sold at -10, whichever comes first. Once the stock hits target 1, which is my 8%, I'm going to raise my stop to break even on the remaining shares. Okay? Now, why do I do that? Well, because if my stock hits the 8% target, I raise my stop to break even, right where I enter the stock. What if it rolls back over, which is not uncommon, right? It just rolls back over, it just doesn't want to go higher. Well, then I get stopped out at 0 on the second half. I make 8 on the first half, so I netted 4% on the trade. Still a nice little income trade, right? So once I hit my target 1 of 8% and raise myself to break even, unless the stock gaps down, I'm guaranteeing myself 4% on the trade, and then I can continue to let the rest run if it wants to do so. So once I hit my target 1, then I'm going to raise myself to break even, and I'm going to trail 1% behind the 50-day moving average, the simple moving average on the remaining shares. So these trade management rules, these money management rules, they're trend following rules, right? And they have made me a lot of money. It's just so incredibly simple, and I've tested a lot of different sell rules. And this is something that's simple, that's replicatable, that you can do, and it's done me very well. Okay, just simple trend following rules. But the most important thing is I treat all trades the same. Right? Because I have no clue which one is going to be my biggest winner. Last year was some bank no one's ever heard of, but the system told me to get in. It ended up being a huge winner. You just would have never thought, right? You don't know. So you treat all trades the same once you're in, and then let the trade tell you which ones are going to be your big winner. So very, very simple rules. You can take a snapshot of this, right? I've got a lot of time and man hours tested in this trade management rules, right? And this one was the winner by far. So can you do this? Can you spend 15 minutes per weekend to find these setups, right? I think you can. Can you place a market order before Monday at 9:30 Eastern, right? I think that's simple enough. Now, can you set up a bracket order? This is something we haven't talked about. I'm just gonna quickly run through this. This is just a simple screenshot from Street Smart Edge of a bracket order. And the beautiful thing is, like, once you get filled on Monday morning, you can set up a bracket order and go fishing. Like, don't stare at the screen. Go do whatever it is you want to do for the rest of the week. You got your trade on, okay? So it's just very simple. This is a Red Robin Gourmet Burger. Again, just a sample, but you can set your profit target, right? If you want to sell it all at a certain place, or if you want to sell a stop loss. So you can simultaneously, set your stop loss where you want, set your profit target what you want, place your order, and then walk away. Whatever the stock does in between these two prices is irrelevant. You don't even have to watch it. It doesn't matter. You can get an email whenever it hits one of these targets, okay? So again, the goal is to be completely objective, right? To not stare at the screen, and just to have a trading system that only takes 20 minutes per week, right? Because after you get filled, you place this bracket order. I like to go fishing, right? Very, very easy. So this is what the system has done, or at least my alerts have done in the last 2 years. I'm going to show 2019. I'm going to show 2020. 2019, I sent out 38 Monday morning setups, right? So Monday mornings before the market opens, boom, we had 27 winners, 71% win ratio. On average, I'm going to send about one trade per week, about 3 per month. Now, why 3 per month and 4 per month, not 4 per month? Well, because sometimes the market looks ugly, right? And I don't want to send an alert Monday morning if the market's gapping down 2%. So every now and then, I do use a little bit of discretion on what the overall market is doing. For example, I completely skipped March of this year. It was the best decision I made all year, right? But those were the only 4 weeks I skipped. Actually, I might have skipped one more, but I think you get the picture. So on average, the trade can last about 2 to 4 weeks. You could have about 4 to 5 on at a time. Right now, I own 5 of these trades, okay? So in 2019, 71% win ratio, we averaged 5.88% net gain per trade. That's after you take out the losses. So that means, you know, if you would hit the buy button 38 times in 2019, you put 10,000 in each trade, you'd have made $588 per trade, all 38 times, okay? So that's the 2019. Now, the 2020 numbers are still very good. We've had 39 setups so far, 25 winners, 64% win ratio. I said I completely skipped March due to the coronavirus sell-off. Best decision I made all year. They all would have been losers, as I'm sure everything was if you were going long in March. So several of these trades in this is still live, because I told you I still own 5 trades right now. But as of right now, we're still averaging, you know, we have a bear market of 35% this year, and we had a correction of 12% in the NASDAQ as well. On top of that, still average 5% net gain on every trade. So you'd hit the buy button 39 times. So far year to date, if you'd have put 10,000 in each trade, you made $500 every time. Okay, that's just a complete average. All right, so 5% net gain per trade. That's what we've done so far this year. Now, I like to trade options as well. Okay, so you know what I learned is, so I trade the stock and I had an option. So what I learned is you can just add one simple call contract, just one, nothing fancy, nothing simple, right? And you know, if you were to put $10,000 per trade, like this is what you would have pulled out of the market from just your stocks on a monthly income basis. Right, over the last couple of years, $1,862, you put $10,000 per trade. But what's interesting about this is if you would have bought an additional one call contract on each, it would have added an extra $793 per month, an extra on top of that if you were to just add one call contract. So monthly income with stocks has been pretty good over the last couple of years, but monthly income with stocks plus option has been about 85% better. So it's done very, very well just by adding, again, simple call option, nothing fancy, nothing crazy, okay? So these are just a couple testimonials from people I work with. You can say, Scott said, I sold half at 8%, been rolling the remaining ever since, currently up 198% on a closed position, 220 on an open, tremendous trade. Okay, so he was obviously trading stock and trading the option, okay? I actually like this testimonial better. Jim said, I've slowly come around to completely following your guidance and am doing well as a result. I realize we're on a hot streak right now, but your basic principles are rock solid. I'm also making some outside buys, call it Play-Doh, using your concept. So far, so good. Now, why do I like this more? Because you can hear the breakthrough happening in his email. Like, you can hear him change. You can hear him going from discretionary to rules-based. And I believe no matter what system you trade, I'm just obviously a fan of rules-based systems. So rules-based systems, I mean, they're designed to take the emotions out of trading, right? Follow a trade plan. Follow a rules-based system because they're designed to give you more freedom. We know the smart money uses them because they work, right? It's all these smart monies, all these hedge funds, they all have rules. They have rules for a reason because they work. In addition, they keep drawdowns limited, right? I don't like big drawdowns. I like very small drawdowns. Drawdowns are going to happen, but when they're going to happen, I like them to be small. And it allows trading to be a money-making business, not a hobby. So you have to mentally get out of hobby mode and into business mode. So if I taught you everything, right? If you want me to do some of the heavy lifting for you, right? You want to work with me, you want some additional help from what I've taught you, here's what I got. So this is the weekly reversal program. So right now I'm offering the weekly reversal course. So it's going to tell you there's only so much I can fit in 40 minutes. It's going to teach you how to find these stocks, how much to put in each stocks, how to narrow down the list. We already talked about when to take profits. So, you know, again, there's only so much I can fit in 40 minutes. You have a great trading system that you can stick on your computer right now. This continues to build on that. In addition, you know, I want to teach you how to fish, but while you're learning how to fish, I'm going to give you the signals also. So every Monday morning before the market opens, I'm going to give you my alert, right? I'm going to give you the one I found. Like, hey, you know, this is where we're getting in. We're getting in at the open. Price target is here. Stop loss is here. Right before the market opens on Monday. That way you can look at it, say, place your order, and then go on with your week. So you're going to get the full course. You're going to get the signals as well. And as a bonus, the weekly reversal, it is my top strategy, but it's just one of my top strategies. In the 5 Cornerstones course, I'm going to give you all 5. Okay, so you're going to get the weekly reversal course and the signals, and then my top 5 strategies as well. Now, I'm going to throw in a Black Friday deal that I actually ended on Sunday for my audience, but I wanted to do something special. I realized, I guess we're a day out from Cyber Monday, but I wanted to extend this. New bonus for the first 20 is I'm going to send you options alerts as well. So, you know, we talked about you just add one call option, right? In addition to the stock, it would have added an extra $793 per month. So for the first 20, I'm going to send out, not only am I going to send out the stock alert, I'm going to send out the option alert to go along with it as well. So it's something I just closed Black Friday with my own audience. I'm just going to extend it today. If that's something that, you know, you want to take advantage of, here is everything that's going to come into play. You're going to get the weekly reversal course. You're going to get the weekly reversal signals and the 5 Cornerstones course, right? We talked about that, and option alerts on all signals. Huge value. Today is only going to cost $267. So normally I do sell the weekly reversal signals alone for $267, and that's an annual subscription. You can cancel anytime. But I am going to throw in the options subscription for free. Right, so if that's something that interests you, go to thetradersplan.com/festival. It's a secure order form, and go ahead and place your order. So again, I will automatically add you to the options list. The options alerts are going to be free. They are a special today, and I'm going to add those as well. And you can see those on the order form, thetradersplan.com/festival. It's $267. That's an annual subscription. You can stay as long or as little as you like. That's completely up to you. If I realize I'm running out of time, so if you do have any questions You can email me at steven@thetradersplan.com. Again, here, I might drop this in the chat box real quick before I go. So that's steven@thetradersplan.com. If you have any questions, I'd be happy to answer them for you. So I'm kind of looking at everything right now. A bracket order is good for half the position to be working. Yeah, so the bracket order is good if you want to sell the whole position at 8% or you want to sell the whole position at 10%. So if you do like my money management rules where you sell half at 8%, just use, an alert where you get an email when your stock hits the 8%. That way you can just immediately go in and sell it, right? Raise your stop to break even. Is this a long only strategy? Yes, this is. I get it. It's a very common question. I believe the market has a long-term bias, so I believe I've never tested it on the short side, but I believe it would lose money personally. One more question, and then I'm going to let you go. This question is, what is your website? TheTradersPlan.com. Right here. TheTradersPlan.com is my website. If you want to take advantage of the free options alerts added to this annual subscription, you go to this order right here. And that's my time. I appreciate everybody. Thank you for paying attention. Again, Steven, STEVEN @thetradersplan.com if you have any questions. And I'm going to hand it back to the organizer.